What is up, YouTube? Welcome back to Stocks by the Numbers, and today I wanted to take a quick look here at Tesla, a company that everyone's familiar with, ticker symbol TSLA on the NASDAQ. And when we're looking at Tesla here, first of all, draw out a max chart. Boom! Can you imagine getting in 24,000% return? Is it justified? Is it overinflated? I don't know. Let's find out. First of all, the few numbers that I look at here, we're looking at $950 billion market cap, and we go last year they made $54 billion in revenue, right? So what's that? I don't even know, 18, 19 times total revenue. Excuse me. I mean, obviously, that's a heck of a lot higher than basically every other stock that I can think of. So that's why when analysts come out and they say that Tesla is overvalued, you know, and then you have individual investors flipping out saying, oh, this guy doesn't know what he's talking about. Tesla's going to go to the moon, blah, blah, blah. You know, you have to remember, you only feel that way because you're a shareholder of the company. If we took away your shares and I showed you, you know, a company trading 19 times revenue, a company trading with a PE of 110, you would most likely say, all right, I'll wait for it to pull back and sell off, and then I'll try to position myself at a cheaper price, right? You would not, just using common sense and simple logic, you would not buy this company up here at these levels. Now listen, if you got in years ago, obviously, I'm sure you're appreciating, you know, watching this stock climb up and, you know, make you some very healthy returns. But, you know, it's not always justified, right? And if every stock I spoke about on this channel that has been, that right now is tremendously undervalued, if they all started trading, you know, 15, 18, 20 times total revenue, I mean, you know, you guys, if you took those positions, you guys could be retired inside the next couple of months, probably. But, you know, I'm going off on a tangent here. But I just wanted to switch over here because I know people often tell me, you know, all stocks trade electronically now. It's all computerized, so it's more about the technicals. It's not really about the numbers as much. All right, fine. The one thing I know about technical analysis is that gaps always fill, right? That's what everyone says. And I drew this circle here, and you can see this first gap pops up at, we'll call it 246, and the second gap pops up, and we'll call it like 220, it's like 226. So if it's all about the technicals and gaps always fill, then it's only a matter of time before this company falls off a cliff and drops to sub 300 to, you know, hit these gap fills, right? And see, that's what makes me laugh when you talk about a company like Tesla, because anytime you say anything except the stock's going higher, everyone and their brother comes out and tries to bash your opinion and act like you have no idea what you're talking about. Yet if you ask them to, you know, give you a few other companies that trade as overinflated as Tesla, all of a sudden their mind draws a blank, right? So you can't have the best of both worlds, right? This cannot just be the anomaly that's never going to come down to earth. So according to the technical analysis, it should pull back and it should fill these gaps before it goes higher, right? Technically. And according to the numbers, as we just laid out, a little bit high, especially in my opinion, you know, but again, that's just my opinion. Again, I'm sure if you own the stock, you're going to act like, you know, I don't know what I'm talking about. I don't know how to read stocks, and I'm crazy. But, however, I noticed apparently anytime I do a video or a short review on any EV company, that's when the shareholders come out and they try to bash my opinion. And listen, obviously, you're entitled to your own opinion. You know, however you feel about a company, that's entirely your own prerogative. But, you know, again, you can't sit there and act like I'm coming out of left field with these numbers, right? Because if you look at the American Expresses, the Mattels, the Goodyear tires, even Apple, Amazon, right? These companies don't trade 19 times total revenue, right? So, you know, just think about that before you're, you know, quick to jump in the comments section and just try to bash someone on their opinion, right? Because I'm a realist. I'm looking at this using, you know, simple logic, common sense, looking at a couple of numbers, and in my opinion, overvalued. However, I will say we come here to the PE ratio. As you can see, this is over the years, right? 2020, 2021, and current. So as you can see, the PE exploded, started to chunk down from over 200. Now it's over 100, right? Slowly starting to come back down to earth. Price to sales ratio was very low, single digits, exploded in 2020, in my opinion, when the stock price exploded due to stimulus money. Now it's kind of coming back down to earth. It's sub 16. Price to cash flow, look at this, sub 30, 30, and then boom, over 100. Now it's down to 75, right? Slowly starting to come down. Price to book, believe it or not, even with a lot of companies, 7 times book value could be viewed as high. 12, 29 times book value. Right? This is why throughout all of these years, analysts were constantly going on TV telling people that they feel that Tesla is overvalued. Because whether you want to hear it or not, it was overvalued. It has been overvalued, and it probably still is overvalued. And now you can see a big explosion here into the 30s price to book ratio in 2020 and 2021, and now we're sub 30 here at 26. However, I'm not knocking the business of Tesla, right? I'm not saying sell your Tesla stock because it's going to go into the shitter and it's worthless. That's not what I'm saying. However, I am saying that it's tremendously overvalued. There are gaps that need to be filled, right? The numbers don't support the market cap and the current stock price, so this thing should have a massive pullback. Obviously, if you're a trader in the short term and you're bullish, you don't want to hear that. But on the flip side, if you're a long-term investor and you have some cash on the side and you do see a company like Tesla up at 900, all of a sudden it starts selling off and it's back down at 400, 300 and change, you're going to be happy as a pig in shit, right? Because you're buying a brand name company that everyone loves, that's widely held, that's doing good business, and it was up at $900, $1,000 a share, and now you're buying it for high twos or 300 and change, 400 and change. So it really depends how you're playing the company. But again, I'm not here to personally attack anybody. If you're in Tesla and you want it to go to the moon, I hope it goes there for you. I really do. I wish you the best of luck. I hope everyone makes millions of dollars. But anyway, back to reality. So we come here, return on assets, as you can see, negative throughout the years. 2020 goes positive, jumps up to almost 10%, boom, up to 15% here currently. Same thing here, return on equity. Massive negatives, goes positive here in 2020, jumps up to over 20%, and currently over 30%, right? These numbers are nothing to sneeze at. Return on invested capital, same thing, went positive, pops up to north of 15%, now it's at 25%. Gross margin percent, 25%. Operating margin goes from positive and flat to 6 to 12 to 15, right? These numbers, net margin percentage, right? I mean, these numbers are nothing to sneeze at. You cannot sit there and say Tesla is a bad company. Tesla doesn't have a good business model, right? Again, that's not what I'm saying. However, 19 times revenue, 110 PE, double gap to fill on the technical side. If you don't just like to hear me talking about the numbers, you want to look at the technicals, fine. We got a double gap to fill over there. So this company, in my opinion, from many different viewpoints, should pull back to sub 300. But hey, that's just my opinion. And I'm going to leave it there because it's a bit of a mixed bag. And I'm sure a lot of people in the comments sections are going to appreciate what I have to say, because they might be looking for their other EV positions to start gaining some fuel, because Tesla really kind of takes all the attention. And on the flip side, you're going to have people who completely disagree with my viewpoint because they own Tesla and they just want it to go to the moon. And, I completely understand where everyone's coming from. Again, just throwing my hat into the ring here. These are my 2 cents. This is my opinion. Looking at the numbers, looking at some of the technicals, I feel it's a little bit overvalued here at these levels. But we'll end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. Helps out the algorithm. Helps me get a few eyes here on the channel. If you appreciate the content I'm putting out, push the subscribe button. Personally, it means a lot to me seeing that, you guys appreciate me making the videos, taking a few minutes here just to talk about a few companies here that we're all looking at, we're all interested in. And like I say in every video, I know that the markets are volatile. I know they're uncertain. I know they're rocky. So moving forward, I wish everyone success. I hope everyone makes a couple of dollars. If you have any questions, comments, or concerns, please drop it down in the comments section below. I'm usually very quick to reply. And I want everyone to have a good week. And I'll see you guys in the next one.